For years, I have subscribed to this investment newsletter from the Aden Sisters, Pamela and Mary Ann. It's called the Aden Forecast, and they are underwriters of our program right now, to put that out there. And but it's just been a great source of information for Louise and I for I think several decades, at least well over a decade anyway. And so I'm really pleased to have on the air with us right now Mary Ann and Pamela Aden, the co-editors and publishers of the Aden Forecast and directors of Aden Research. AdenForecast.com is the website. You can tweet them at the Aden Forecast. Mary Ann, Pamela, welcome back to the program.
Thank you very much.
Yeah, so I'm curious where you think the economy is at right now from the point of view of small investors, of people who have a little bit of money that they want to protect or they want to see grow. And I realize those might be different strategies. Whether it's, or for that matter, a young person. I was telling Nate the other day, start taking $100 every other week out of your paycheck and just stick it in the stock market someplace and don't worry about it for 30 years. So where are we at right now?
Well, actually, we're in a good place, and the economy does look good. It keeps looking better, even though some people will argue, well, it's been such a long recovery or a long period of expansion that it's got to contract. But so far, the leading indicators that we follow are not showing that. One being the stock market is very bullish. In fact, it's just recently been hitting even further, all of them hitting new record highs, and we have a Dow theory reconfirmation of the bull market. And since stocks generally lead the economy by about 6 months to a year, it's telling us that the economy looks good. In addition, we do not have an inverted yield curve, and that's very good for the economy, and leading economic indicators keep rising. And there's other things too, but those are some key indicators that we follow that have been very, very reliable over the years, and they're all telling us that the economic expansion has further to run.
I was reading Andrew Ross Sorkin's deal book in the New York Times this morning. I get an email every day, along with the Daily Pfennig from, what's his name, on your staff, or who writes for you?
Yes, Chuck Butler.
Chuck, that's right, yeah. And Sorkin was talking about how there's been, so far this year, something like $81 billion in stock buybacks. Just from, I think it was just Apple, it was like $80 billion in stock buybacks. And that all of these stock buybacks that are being done, and that they're probably going to total over $1 trillion by the middle of next year, when this cycle will probably be done. It's been going on for about a year. Are the result of these massive tax cuts, corporate tax cuts that the Trump administration passed, and that it's like pouring ether into the carburetor of a car. I mean, it's a sugar high. You're jacking this thing, and the question is, how long will that last before it gets really ugly? And yesterday in Chuck's newsletter, he was talking about how there are a number of leading indicators, like new home purchases, used home purchases. I don't remember the list now, that are actually have gone negative in the last few months. Are we kind of at a knife's edge point, or is that stimulus and the tax cut and whatnot going to last for long enough that people should feel comfortable jumping into the market, in your opinion?
Well, did you want to go ahead? Yeah. Well, what's interesting is that even though the bull market's been underway since 2009, and it's a very long one, it's not the end. We think that the third wave is usually the last most explosive wave in the stock market, bull market, or any major bull market for that matter. And we think we're on the cusp of that still. So we still have a good upside, but if you want to think of it in the terms of an inning in a baseball game, we would think we're like in the 7th, 8th inning, and still a lot of upside, but we're closer to the end than the beginning, but we still have some good upside, say, this year and next year.
So
I just wanted to add, Tom, that it's true the things Chuck reports are a little worrisome. The numbers you point out are worrisome, but there's always all along there's been some worrisome things, but the stronger good news kind of has overpowered those worrisome items.
Right. I'm sorry, go ahead.
We don't hear you very well, but the resource sector is just starting to get off, which is telling us the global economy is doing okay in spite of all the bad news this year. Mm-hmm. We're just starting to see the resources come out of hibernation. They've been very down, and they're very bombed out, in fact. But we're just starting to see a whisper of that now come this recently, and we think that could be the beginning of a new trend.
You've recommended in the newsletter that people get some of the tech stocks. You know, specifically, you could buy the ETF for the Standard & Poor's for the S&P, or Apple or Google. Some of these companies. I got stopped out of Google. Are there specific recommendations, or is that too specific, and we really should deal with this in generalities?
No, in general, if someone wants to ride the bull market and the major trend, which continues to be up, then something like DIA, which is the ETF for the Dow Industrials, QQQ for the NASDAQ, also the IYT for the Dow Jones Transportation. Those have been very good. They move with the market, and someone could do very well, knowing, though, that you have to be cautious, keep a stop on your position, and just keep an eye out, because you're probably buying maybe for a year, maybe 2 years at most, but this is not something you're going to hold for the long term, at least for most people.
Unless you're under 40?
Yes, exactly.
Yeah.
I was thinking of that. If you're young and can ride it through, definitely that's the place just to sit and then keep some of your money.
Yeah. It just, I mean, look at Warren Buffett and what he has done, and there's so many people who have actually created by just small investments throughout their lives, starting in their 30s, and by the time they're in their 60s, they're retiring with a whole lot. Marianne and Pamela, any final thoughts for us on investment in the markets?
Well, really just kind of stay, let the market tell you what to do rather than you trying to tell the market. That's kind of an important rule, because we all have opinions and we all have reasons why stocks shouldn't be going up, or there's a little bit of, ups and downs in the political scene, or there's some negatives on the economy. But if the market keeps heading up, which it has been, and even though it's been long in the tooth, just stay with it. Yeah.
Okay. Marianne and Pamela Aden, the Aden Sisters, the co-editors and publishers of the Aden Forecast, directors of Aden Research. AdenForecast.com is the website. Thank you so much for being with us today.